Hello guys, welcome to our first Solid as a Stock session. My name is Becky. Welcome. This is my first session as well, so welcome to me, I guess. Now, I just wanted to check, since we're starting, for those of you that are already here, can you hear me? Is it all working? Can you see me fine? Let me know in the chat so I know to keep going. Whilst you do that, if you can hear me, I'm just going to quickly introduce myself here with my email address. So I'm just going to change this quickly to show live. Should do. There we go, as we are officially live now. So my email address there is becky@traddictiv.com. I know it's on its side, but you can email me if you have any questions about what I cover today, becky@traddictiv.com. Sound is good. Brilliant. Thank you, Jose. Okay, so you'll see the video that's in front of you here kind of telling you what to do in order to get signed up to various different things. Obviously, some of you might be new to the session. Some of you might be, veterans. You've been with us a long time. So bear with me if you already know how to do these things. But for those that are new, just wanted to show you a couple of things. So firstly, what I want to make sure that we do is read the disclaimers. So that's being highlighted to you on the top there. Again, it's essentially telling you that this is a demonstration. It's for educational and instructional purposes. It's not designed to be trading advice. So again, read the disclaimer. It's very important that you guys read it. So I will let you do that, let you read that whilst I continue here. Now you'll see that there is a link there, tradewithufos/Becky. So tradewithufos.com/Becky. So I'll just show you where that takes you and what you can do with that link. So if I open this up here, we'll come back to the FX Street calendar in a sec. So it was tradewithufos.com/Becky. Now, if you go to this link, it will take you through to the Trade with UFOs membership starting page. Now, again, some of you might already be members, but there is a new thing on here that I want to get you guys aware of. So first of all, if you wanted one-on-one coaching with me specifically, it takes you to the place where to do that. That's also true if you were to be on a session with Jose. It would be tradewithufos.com/Jose. If it was Andrew, it would be /Andrew/ Louise, whoever does the sessions, and you will see their specific name and being able to meet with them down the bottom there. So there's that. Just going to close that. Now, what you would want to do is just fill your name in here, your name and email address. Now, the reason that you want to do that is because as you come down here, you'll see that this is kind of closed. For people that aren't members, it's a closed section. This is a questions and answer page. So for those that have questions about things, you come to a free YouTube session and you think, how does the autoclimate work again? Or where do I get UFOs? Or how does that work on that platform? Or whatever questions that you have, you can come here and you'll see a list of questions and answers. So if I just show you here, if I log on, this is what it will look like when you are logged in, once that loads. Okay, so you see down here, you can type in a question. So it might be that you type in, I don't know, how do I check sustainability on autoclimate, for example. That might be a question that you ask. Again, try and keep it succinct so it's easy for not just us, but the other students as well that want to come and find the answer to these questions. They'll know what the actual question is. And then you can type in here more in detail what your question is. Once you submit the question, we'll then have many different questions and answers down here that other people can then come and look at. So it's a great way not just for you to get your questions answered, but for others to get their questions answered too by being members and having access to see this. Now, being a member as well also means that you have access to our schedules ahead of everybody else, discounts ahead of everybody else, and you'll get the recordings from the sessions that we do as well. But to me, I think this questions and answers thing is a pretty decent part of what we're doing here with the membership so that you can get your questions answered and help other people as well. So again, if you go to tradewithufos.com/Becky, you can book a session with me one-on-one, you can sign up for a membership, and then you can go through to the website and do other things there if you want to take a course or subscribe to the apps, and you can also have access to this questions and answers section. So that's the introduction. I am just going to go now to TradeStation. So, obviously, today is Friday, the 6th of November. It was meant to be, I say meant to be, election day on the 3rd. It's been a bit of an interesting week, I think we can all say, in the US markets in particular, in the US, in the country as a whole. And the whole world has been glued to their phones and to Google, trying to find out what's happening here with this election, which for some may have meant that you've had great success with the markets. You might have benefited off of some volatility. You might have benefited off of certain movements that have happened as a result of this indecision. For some of you, you might have kept away from it entirely and not really wanted to be a part of it whilst it's all up in the air. Ultimately, that's down to you and your trade plan as to what is something that you want to do. But a good thing to always be aware of, if you come to fxstreet.com/economic-calendar, you can come here and you can look at upcoming news that's likely to have a high impact. Now, I guess we didn't need telling that the presidential election was likely to have high impact. Of course, that's still not over. I guess it might be another couple of days, maybe even weeks, depending on how it goes. And then, of course, if there are lawsuits or if there are recounts as well, which is obviously things that are being quoted in the news at the moment, might take even longer. So this kind of period of indecision where the markets are also maybe unsure what they're doing might be something to be aware of moving forwards. Now, for me, my general rule is around elections, big news events that we know are likely to cause volatility. For me, my general rule is I tend to either keep away or keep my risk very, very low. So you may have certain things on your trade plan where maybe normally you need 8 out of 10 things to line up to take a trade. Well, maybe you say during such indecision and potential volatility, you need 10 out of 10 to take a trade. Or it might be that you say, normally I risk 1% of my account, but I'm going to risk 0.5% of my account, or something like that. So that you can be safer, I guess I would say, and be less exposed, but still be able to maybe take advantage of these things that happen. So out of interest, for you guys that are watching right now, how many of you have participated this week in what's been going on? And have you been following the news? Have you been trying to ignore it? How have you been going so far on your stocks trading? If it is stocks that you're trading, might be futures or Forex as well, or options. How's your trading gone this week? What's your philosophy, I guess, when it comes to keeping away or getting involved into these markets? Be interesting to know that from you guys. So whilst you type that, I'm just going to come back to the charts here to then make this point. Now, the first thing that I want to be looking at always is what is going on in the broader market. Now, it's not that we're always just going to take what the broader market does. It might be that we have a broader market moving upwards or with a confirmed upwards climate or downwards climate, but an individual stock doing something different that has UFOs lining up, EMAs lining up in our favor, and we would still go with that. But in general, if we get an idea of what's going on in the market as a whole, that can help us again with correlations and again to get those different things on a checklist checked in order for us to have, again, greater probability for our trades, especially in times like this. So I will check the news. I will see what we have upcoming that could be a potential high impact. At the moment, again, we know that there is high impact things going on and at any moment news can come out and we could see some extreme movement. So after that, the next thing is to check what the general markets are doing. So for me, I want to look at the ES. So at ES, that's the continuous futures contract for the S&P. You could look at the SPY, you could look at the S&P index on whatever platform that you use. For me, the ES is something that I want to look at. In general, it's the top US 500 stocks. The majority of the stocks that we would trade would probably be one of the top stocks. Not always, but again, in general, if you have an idea of what the market as a whole is doing, it tends to drag everything else with it. It's kind of this, back and forth correlation there between those two things. So in this particular instance, for those of you that may have never joined us before, I'm just going to break it down a little bit and explain to you what we're looking at. So we have over here our auto climate on the left-hand side. I don't know why my arrows keep doing that. There we go. On the left-hand side, we see these little colored dots. We have blue dots, we have red dots. What are those blue and red dots telling us? Essentially, what this bit of technology is doing is answering the question for us: should we buy or should we sell? Or should we do nothing? Oftentimes when people are trading, we are so geared up to want to take trades. We want to press the buttons. We want to see the prices move up and down. We want to be involved. But actually, more often than not, it's better to keep away. Again, we want to make sure we have as many probabilities on our side as possible, which means we need to know sometimes it's not a good time to trade. So it could be that we buy, It could be that we sell, or it could be that we do nothing. Those are the only three options that we have when it comes to our trading decision. So when we're looking at a market, how would we know whether or not to buy, sell, or do nothing? This is where AutoClimate comes in and helps answer that question for us. So we have thick blue dots that tell us that we should go long or buy. We have thick red dots that tell us that we should go short or sell. And we have thin dots of either color. Those thin dots are telling us lack of probability, lack of statistical advantage one way or the other, keep away. So in this example that we have here in front of us today with the ES, we have indecision. Not surprising, really. We have indecision when it comes to a weekly chart. Now, the timeframes that we're using a weekly chart on the left-hand side there, which is helping us decide what we're going to do, buy or sell, or do nothing. We're also using a 55-minute chart, which is going to help us with our entries. Now, again, you may use different timeframes. I'm going to go for a sort of general swing approach today. As we go through sessions, I'll do different types of approaches. We might do shorter term ones or much more longer term examples. I'm going for a swing example today. So these are the examples that we're using. Weekly for our overall decision making, and then a 55-minute for our entry. So out of interest, for you guys that are here, how many of you are already part of the Trade with UFOs community? Do you already use AutoClimate? Do you already use AutoUFOs? And let me know if you have any questions on that as well, as to how they're used or where you get them. Or if you're completely new and you don't know how it all works, let me know and I can explain it in a bit more depth. As you do that, I'll just continue to explain the example we have in the ES at the moment. So because we have a thin red dot, there is effectively nothing to be done on the index as a whole, on the markets as a whole. That's not to say we won't have opportunities on individual stocks. That's why we might use other scanners or other things. But again, it's just highlighting to us the indecision that we have at the moment when it comes to the broader market. So again, that might make us be a little bit more cautious with our risk, or a little bit more strict on the amount of things that we need to line up before we take trades. So if we just come across to this example here, so we have weekly here and we have 55 minutes. Now I've run some scans, and again, you guys let me know if you need us to send you some scans. You can email me, becky@traddictiv.com, and we will send you these scans. Essentially what I've done is I've scanned for good opportunities to go long and good opportunities to go short. Now, within the general up direction, that's the scan that I ran here. That's this one that I did here. I ran it, and this is the list that I have. So in this list, it's showing me, what's that, 9 or 10 different stocks that fit the criteria for being generally a good idea to go long. Now, that's not just going to mean that we take that and we just go and buy it. We don't want to just buy things at random or at a random place, and we don't want to do things that don't fit our other rules, but it at least helps narrow it down a little bit. When you're looking at potentially thousands of different stocks you could choose from, and that's just the US markets, it kind of helps to have it narrowed down a little bit there. So if we let's just take this first one. So if we click on that, it will then load on our TradeStation accounts. This is Bed Bath and Beyond. It's still loading at the moment, so we'll wait for that to load. We'll wait for that pending thing to go before we analyze what's on here on the right hand side. But as we're looking, we can see from the AutoClimate that we have a thick blue dot. So when it comes to question number 1, which is should I buy or sell or do nothing, this is showing us a thick blue dot, which tells us it's a general better idea to buy. Now, there are extra layers to this. So it might be something that we're looking at and saying, yes, it's a good idea to buy, but it's been going up for a while now on a weekly chart. We can see from these numbers here, we have these 3 numbers. This shows us how, I don't know why my arrows keep doing that, how long that market would normally go up for, how long it would normally go down for, in terms of the amount of candles that it goes either up or down. And then we have where we're at now. So how many candles we've been going in that direction at the moment. So we can see from this, if we just ignore that middle number for now, because it's an uptrend or an upwards climate, usually the market would go up for 5, I'm just going to round that up, 6 candles. And we have been going up already for 16, meaning that the probability of it continuing to the upside is less likely. It's not to say it won't, and again, especially with things that are happening in the broader markets at the moment, that's not to say that we wouldn't see it continue to push past this, unlikely situation of a continuous move to the upside. That could happen. But again, when it comes to wanting to put more probabilities on our side in an indecisive broader market, in the situation that we're in the world at the moment, I would say it's not good enough for me for wanting to place a trade. So that really means if we're looking at our auto climate on the left-hand side, and that's helped answer this question, once we've analysed this, we don't even need to analyse this side of things. What's the point in looking what's going on the right-hand side and trying to find entries or stops or targets if what we have on the left-hand side, what we have on our auto climate, is telling us it's probably not a good idea to do it at all? Again, saves our time, save us doing a bunch of analysis, putting on trades that have less probability. So we move to the next one. So let's click the next one down. So BMY is the ticker symbol, which is Bristol Myers Squibb. Never traded that before, doesn't matter. It's all about using technology to increase our probabilities. If we're going to go long, or if we're going to trade, do we want to go long or short or do nothing? And if we're going to go long, where do we do it? If we're going to go short, where do we do it? And that's where this main screen will come into play and these UFOs will come into play. For the time being, we haven't yet quite got there because we are still having a look as to what our opportunities are. Now, again, very easily, we just look at the latest dot that we have here. It's a thin red dot, which means no trade. No probabilities, no or lack of probabilities, lack of statistical advantage one way or the other. So we don't want to trade. It's not going to be useful to us either way. So we come down to the next one. Again, this is the beauty of using scans. Just being able to click from one to the other and using technology to help us answer these questions is that it doesn't take half an hour to analyze one thing before you realize you shouldn't be doing it. Same thing here, we have indecision. Again, bear in mind, we're in a general broader market that's indecisive right now. So it's not surprising that we have indecision when it comes to the individual stocks as well. So again, thin red dot, it's a thin dot, less probabilities. Move on to the next one. NWL, that's Newell Brands. Now on this one, we have a thick blue dot. Now, I'm just going to pause here for a second, because if we have a thick blue dot, then we in theory have permission to go long. And we have these three sets of numbers here, which can help. Again, you guys let me know if you've used AutoClimate before and I can explain it maybe a little bit in more depth. But otherwise, I will just explain very briefly what we're using these numbers for. So again, you let me know where you're at and if you need a little bit more explanation as to how we're using these and why we're using these in the way that we are. So with these three numbers, we have this first number here tells us how long that market usually goes up for. So it usually goes up for 7.80 candles. So I'm just going to round that up to a nice round number. It's 8 candles. So it goes up for 8 candles and we're on candle number 9. So we've just gone past what is usual in these markets. Now, before we had an example where we had normally a market going up for 6 candles and it was on candle number 16. So it was more than twice what usually happens. Now, my general rule is as long as it is within 50% of what is normal, then I'm willing to take it that next step further and go and look for an opportunity to get involved in that trade. Now, again, for those of you at the moment that want to be a little bit more strict, a little bit less risky, I guess, or a little bit increase your probabilities slightly based on the indecision in the global markets and things like that, then you might say, no, it's definitely got to be underneath what normally happens. For me, my normal rule is 50%. So if we look here and we have basically permission to go long, that's when we're now going to bring in what we have over here on the right-hand side. Now, again, it doesn't necessarily mean that we're going to place a trade or that we're going to dive in and that we're just going to go press and buy right now. What's the chances that right now, the time of day that you happen to be sat down looking at the charts is the best time of day to buy something? I always think that's it's quite a strange sort of concept and approach. It makes sense as to why people do it because that's kind of how they've been taught to do things. You go and buy a stock right now. You go and sell something right now. And you buy things based on what you think is good and what you think is a good price, not based on objective methodologies. And that's what often hurts people because the markets are full of millions, billions of people potentially that all have different subjective views as to what's a good price, what's good, what's going up, what's going down. This is why we use technology to help eliminate a lot of these problems, to make sure that we're not just buying now because it happens to be the time of day that we're sat down. We might place trades ready and waiting right now because we're sat down right now to do it, but we're not just going to go and press buy or press sell and get in right now into a trade. Very, very unlikely. So we are using technology to eliminate a lot of the confusion and show us not only that we should be going long, which is what we see here on this example here with NWL, the Newell, Newell Brands, but where we would go long if we go long. And we still have various things that we need to line up. So we have here an EMA price of 17.88. Now, why is that important? Usually, the EMA is a line or an indicator that's put on charts that many novices across the world, also mutual funds as well, will be using as a reference price for getting in and out of the market. So if other people are going to be getting in at a particular price, it makes more sense that we also get in at that particular price, because the more people buy, the more likely prices to go up. The more people sell, the more likely prices to go down. Now, we have permission to go long here, so we would be using the EMA reference as a place where it might make more sense to go long. Again, you guys let me know if you use EMAs, if you use other indicators as well. It'll be interesting to hear if you do use other indicators, if you layer other things on top of this methodology or separate to this methodology that give you slightly better odds or maybe work for you a little bit better. For us, we're using the 9-period EMA. So the 9-period EMA there is 17.88. But do we want to just put our trade at that exact price? If we do that, then we're buying, yes, okay, at a number that has a reference based on technology and based on what is likely for other people to do, but doesn't really give us any reference as to where stops should be, where we would place targets, ratios of certain things, and it doesn't really give us as much probability as we want. So what we want to find ideally, and we don't actually have it in this example, what we want to find ideally is that this number, this EMA number, is enveloped by one of these, whether it's a green UFO or a red UFO. If we're going long, we want it to be a green UFO. If we're going short, we want it to be a red UFO. Now, the green UFOs are showing us here, UFO stands for, if I just type this out here, UFO is unfilled order. So what this is showing us, what the UFOs are showing us, are where there are likely to be big stacks of either buy or sell orders. Now, if we have a big stack of buy orders that are waiting essentially to push price back up, and we have an EMA price that brings in buyers, then we have more probabilities that price turns from that area and goes up, rather than buying at random right now. Again, we are using technology to show us where the probable areas are. Now, we could still be wrong. That's why we manage things in terms of stops and stuff like that, manage our risk. But essentially, this is what we're looking to do. Should we be long or short? If so, where are we going to do that? And if we're going to do that, if we're going to go long or short, do we use the EMA? You might use Fibonacci retracements. You might have other technology that you use that sort of layer in that to give you the probabilities. But most importantly for us, it's these UFOs. Where are there big stacks of orders that are likely to change price? And ideally, where are they that align with another reason why people might do that same thing? Now, for the moment, we have 1787. That is the EMA. And of course, that would be around about here-ish. We have no green UFOs in that area. So unfortunately, there are no opportunities here. But again, we don't just want to be placing trades for the sake of it. We want to only make sure that we are placing trades that have probability on its side. And at the moment, not enough probabilities. So we don't want to do it. I would rather keep away from a market than put trades on and lose. So we'll just click on the next one on the scanner and have a look at the next example here. By the way, guys, if you have particular stocks that you want to look at, whether it's some of the FANG stocks or stocks that you usually trade, let me know and we can take a look at those charts as well and see what's going on, see what's a good idea. So in this one, ON Semiconductor. So let's have a look here. Just going to move price over a little bit. So once again, we have a thick blue dot. That's telling us that we have permission to go long. We have probabilities to the upside. If we use these three sets of numbers, then we can see that usually, I'm just going to round this up, usually this market would go up for 7 candles. So 7 weeks, it's a weekly chart. So 7 candles on a weekly chart is 7 weeks. And we're on candle number 5. So we've been going up for 5 weeks, usually go up for 7. So we have probability that the market continues to go up for at least the next couple of weeks. Again, I use the word probability, not guarantee. We don't know if that is definitely going to happen. We just know it's more likely to happen. So again, it just starts that process of checking boxes that put probabilities on our side. So again, we have permission to go long here. Let's have a look at the EMA price. So the EMA price is 24.56, which would be round about here. Let's just see if we definitely fit into that one. So we see we have a UFO just here that I'm highlighting there with my my mouse. I'm just going to click on the side of that UFO and just freeze price for a second. So you'll see the top of that UFO is 24.62, which is higher than that number, which means 24.56 does fall within this UFO. I'm just going to pause here for a second for those that might be watching thinking, hold on, that's not the same numbers as what you've got there. The numbers that are on the side here refer to where the bulk of orders are, which is basically that inner circle on the UFOs. But we don't need it to necessarily be exactly within the highest concentration of orders. As long as it's within the UFO as a whole, we're happy with that. So at the moment, this is what we have. We have an EMA number that is within our green UFO, which tells us that we have different probabilities for buy orders to come in at that point. We also have a climate, which is telling us that we're up, with probabilities that it continues upwards. Again, this is what I mean about having as many things line up as we can in order to place trades that have probabilities. Now, one of the things that we need to think about, it's depending on the movement of price, depending on volatility, is that we may have a situation if price comes down here to hit this. If we use this UFO, let's say this was our entry, price comes down here and hits this entry and hits it here, the EMA is going to move, because the EMA, it's a exponential moving average. Keyword there is moving. It moves with price. It's tracking price and it moves with it. So if the EMA starts to move, then the number is going to come down. Now, what we want to essentially anticipate is, are the UFO and the EMA values going to line up if price moves down to meet one of them? So if price moves down to meet this UFO and the EMA value falls too far and becomes, let's say, 23, then this would now be invalidated. This would now not be a trade that lines up. So there's an element of anticipation here. Now, sometimes, obviously, we might anticipate something and be slightly wrong. So we would put alerts on. We would maybe place a trade and then put an alert to let us know as price continues to move towards our entry as to whether or not we cancel it. I'm going to say that with this particular situation, I would think that if we see volatility enough to push price down a couple of dollars, it would probably be reasonably quick at the moment. If it was to be pushed down at all, obviously it might be that volatility pushes it up quickly. If it pushes it down quickly, then the 9 EMA that's tracking the last 9 weeks can't move quick enough to then invalidate this trade. So I'm going to say that we're going to take this trade here. We're going to use this UFO. And again, you would have alerts on. Potentially, let's say you have an alert. If this is your entry, you may have an alert round about here, so that if price comes down, that lets you know. You can then check, where's my EMA? Is it still valid? Is it still something I want to take or not? So if this is the UFO that we're going to take, what I usually do is I like to draw lines around my UFOs. The reason for that is, those of you that might use UFOs, you'll notice that when price comes into them, or sometimes when price comes into them, it depends how deeply it moves, and then leaves again, i.e. the orders have been filled, then there are no longer unfilled orders there, meaning the UFO disappears. The UFO is not going to show us that there are orders where there are not. So when it realizes that those orders have been filled, it's going to disappear, which means that for me anyway, it might be sometimes hard to figure out where you got in and where you got out. So for me, I like to have very clear lines on my chart, so it's really easy for me to see what happened past, when I look at it again, sort of after the fact, go and look into the past and see what happened, and I've got all of my numbers there. It will also help me to go through this exercise of showing you where we're going to put our entries and stops and things like that. So I have customized my Fibonacci lines. I'm just going to show you here. I've just drawn them on the chart, top to bottom, just randomly at random price. Now, you'll notice normally Fibonacci lines, when you draw that, are going to have different colors, different lines, obviously associated normally with those Fibonacci retracement percentages. I don't use Fibonacci for that reason, which is why I have customized these lines to simply be 2 horizontal lines that just go across the chart. Now, again, the reason I've done that is because I want to be able to highlight this area here so that those lines stay on the chart, and those lines will represent my entry and my stop. I will also use lines to represent my targets so that, again, it's really easy for me to see what happened, when it happened, how it happened. So again, that might not be something some of you guys need to do or want to do, but this is my preference. So we'll just go through this process again, and hopefully it makes it easier for you guys to see how we figure out our entries and stuff as well. So remember we did before, if we click on the edge of the UFO, we click and hold, then we come up with this little box. This little box will tell us the beginning price and the end price, i.e. the top and bottom prices of that box, which is helpful for us. So that top price there is 24.62. So I want my top line there to be 24.62. Really close there, I'm a cent off. So what's that? 24.61. So I just need to move that. Now the bottom number is 24.19. Now, 24.19 is now our reference value for our stop, but we normally want to give it a little bit of wiggle room. And again, you may have rules that tell you that in potentially volatile markets, you may give it more wiggle room. You may have rules where it's a set amount per, over a certain value of a stock, it's a certain amount of cents, or it might be a percentage of something. For me, I'm going to give it a 10-cent wiggle room, which means my entry is going to be 24.62 and my stop is going to be 24.09 because that is 10 cents below this. Again, let me know if you're with me, guys. Let me know if you have any questions or if you have any confusions about what I've done so far. As I wait for you guys on the chat box, I will continue, but I will keep checking. So let me know if you have questions or anything. So all I did there, I'm just going to show you that again. I just double clicked on one of the lines. I double clicked on one of the lines and it brought up this box. Now, usually it would bring up the settings box and that would be the default. And normally these things would be highlighted. As you can see, I unticked these or unchecked these. So I was just left with 0 and 100%. That's how I customized it to just be those two black lines. If I come down to data on this box, I can type in over the top what I want my entry and stop prices to be. Now, to be clear, that's not saying what I want my entry and stop prices to be as an order. That's a separate thing. We'll go and do that in a second. What I mean is that I would want it to be highlighting on the chart for me where my entry and stop would be. So it was 24.62 would be my entry, and my stop was 24.09. If I now click OK, all I've done, by the way, there is just click on the corresponding boxes, the top and bottom boxes, and just typed over with the price I want it to be. Click OK, and you will notice those prices have changed slightly. Those lines have moved slightly to now show me exactly where my entry and stop price would be. So now that I have my entry and stop price, what I want to figure out now is if I'm going to buy at that area, where am I going to sell it? If I'm right, where am I going to sell it? Again, you may have different rules with this. You may trail your stop. You may sell it at certain levels. You may have certain different sort of conditions that you want to do. Now, again, you may have different rules depending on the situation. So, for example, you may be somebody that says, I take an opposing UFO. That would be something that we would do. I take an opposing UFO that's maybe quite a while away, but I'm going to keep the trade on for a few days. So that's okay. But you might say, in the case of potentially volatile markets and not knowing, one day to the next at the moment, what the election result might be, when that information is going to come out, you might say, I don't want to be exposed overnight. So I'm not necessarily going to put a trade that's quite far away because I'm unlikely to hit it before the end of the day. Maybe you just say you close your trade by the end of the day, whatever you make or lose. Maybe you say, I'm going to have just my safety target. Just a one-to-one. Maybe you say I'm going to have my safety target and I'm going to have my final target based on the opposing UFO, based on the rival UFO. But again, I'm going to close it by the end of the day. Again, this is going to be down to your risk management rules and what's in your trade plan. But for me, it's just most important that whatever you do, you are consistent with it. So if you have rules that tell you what to do, do them. Don't change them based on a whim. Change them only based on objective data that tell you what you should and should not do into different situations. And again, some of that's going to depend on how you think about risk, how you feel about risk, what your subjective feelings are when it comes to these kind of things. So the first target that I'm going to use is what we call our safety target, meaning I'm going to have a one-to-one target, which will be half of the position size. So I'm just going to bring up a calculator so that we can figure out here. So we have 24.62, that would be our entry, minus 24.09, that would be our stop. We're figuring out here what the risk is, what the difference is between those two numbers, what our risk is if we were to buy one share. So if we were to buy one share at 24.62 and we were wrong and it got sold at 24.09, we would lose 53 cents. Of course, it's up to you as to how many shares you would put on. I'm just going to do a nice round 100. Just as an example, again, you would have whatever risk parameter you want. You might trade 2 shares, you might trade 200 shares, you might trade 1,000 shares, 5 shares, 50 shares. That's up to you. That's up to your risk profile. So for me, I see there that it is 53 cents. Now, if I want to have my safety target at 1-to-1 away, what that means is that if my risk is 53 cents, then my target, my safety target, needs to be 53 cents away. So I'm risking the equivalent of my, I'm making the equivalent of my risk. So it's a 1-to-1 scenario. So I'm just going to add that to my entry price to give me my safety target price, 25.15. Now again, I like to have things drawn on the chart, so I'm just going to go and put that on the chart with a horizontal line, so 25.15. So I'm just going to grab this horizontal line, I'm going to double click, I'm going to put it on the chart, and I'm going to double click. Same with anything, by the way, that if you use TradeStation, anything that you put on a chart, you can double click on it and then just type over the data, type over the price to make it move to where you want it to move to with most drawing tools anyway. So what were we? I've forgotten it now. 25.15. Great. So 25.15, that would be our safety target. Okay. Now, final target. Final target would usually be where the opposing UFOs are. So what I'm going to do, I'm going to come into this section here. And I'm going to just make it bigger for a second. And I'm going to turn on my UFOs. Right at the top. Because what I want to do here is I want to find my closest rival UFO on the bigger time frame. Now, it may be that we have no UFO on the bigger time frame. That's what it appears. Okay, so if we have no rival UFO on the bigger time frame, again, there are different ways to do it. For us, or for me, what I would say is that it would normally be a trailing stop kind of situation, which means if price comes into here, again, let's assume that we've checked our alerts, that the EMA is still where it needs to be, and we are still taking a valid trade. Let's say price goes off, hits our safety target, and on its way up, it develops a new UFO. Then our stop that was initially here gets brought up to just below this UFO. And then so on and so on and so on. If it continues to the upside, we trail our stop behind UFOs. Now, you could have a rule that says it's every 1-to-1 or every 2-to-1 it moves, you move it 1-to-1, or again, there are different ways to manage this depending on how conservative you are. If you are more concerned about probability being high versus reward being high, it's always a balance, always a balance. As long as you keep your risk managed to your risk profile, that's the most important thing. And as long as you are consistent on how you do things. Now, for me, I'm going to say we would have a trailing stop on this. So what that means is I would put 50 shares to be taken off at my target 1. So risking 100 shares in total, 50 shares taken off at target 1, and 50 shares I'll put in a random number and then delete the target so that I have 50 shares still running in the trade. And then all that will happen is my stop will move behind my UFOs, which is a manual process. So that's what we're going to do here. So what I'm going to do now, I'm going to go to, I think I have it open. There we do. I'm going to go to TradingView. Now, I'm using TradingView in order to place the trade. And the reason for that is because, first of all, people use different platforms. So for those of you that might use TradeStation or TradingView, I'm kind of using both. So hopefully you're seeing something that makes more sense to you in terms of what you've already used. But also, I like the function on TradingView to sort of show you the maths and the calculations as well. So I'm just looking at a question here. Why are you using a weekly instead of a daily for a 55-minute entry? Sorry, I came in a little late. So for me, that's just the choice I made between that. So you could use daily for your bigger time frame or your common time frame, and then a 55 for your entry. I tend to use it a little bit bigger, like the gap between my entry and my entry time frame and my common time frame. I tend to use it a little bit bigger, but of course you could do that as well. You could have a 144 minute, for example. If you're having a weekly, you would have a 144, or you would have daily and 55. That would be the sort of standard. This is my preference, but again, that's up to you if you want to sort of tweak that a little bit. Sorry, I should have said that at the start. So yeah, that's the answer. It's my preference, but hopefully that makes sense, that you can of course do it the standard way as well. The daily and 55 would be fine. Okay, so now I'm back on TradingView. I'm going to type in up here, it was ON, was the ON Semiconductor. There we go. So I can come in over here. I have reference to my entry and stop and targets. So I can come in over here and I can say buy. It was 24.62. My stop loss was 24.09. I'm just going to double check that I got that right. 24.62 and 24.09. What's great about this is this works it out for you as to what that difference is. So we did it with the calculator earlier, but TradingView is normally a good way of doing it. Again, it works it out maybe slightly better than if you miscalculated something yourself. Now, the other cool thing is that this is showing us here, if it's one share, what were we risking? Let's say, for example, you had a specific dollar risk that you wanted to risk. Let's say you wanted $22, for example. If you type in $22 into that bit, it will tell you how many units, meaning in this case, how many shares you would have to buy at that level in order for it to be worth less than $22. So again, this functionality on TradingView is something that I think is so useful, because again, it's technology taking care of a lot of calculation for you without you potentially doing something wrong or entering something wrong and getting confused with things. So for me, I'm just going to go for a standard 100 units as an example, or in which case, sorry, this will be 50 units for our first target. So 100 units, 100 shares for the total trade, which would be 50 shares for target 1 and 50 shares for target 2. Obviously, bear in mind, in this example, we don't have a target 2. So we have put in our entry and our stop. Now, in terms of our taking profit, it was 25.15. Now, we can check that we've done that right, because this number here shows you the ratio between your risk and your reward. So because it says 1, we know that's definitely our 1-to-1, our safety target. And then we can just go ahead and click buy. So that's in there. Now, what's great with this, I'm just going to move price there. What's great with this is it shows you on this chart here, I've got my analysis that's done on TradeStation. I've put my order into TradingView. You could vice versa that. Again, you can link TradingView. I happen to be connected to paper trading, but you can link TradingView to TradeStation anyway. So you might want to have your analysis on TradeStation and put your trade on TradingView, link it to TradeStation anyway to do the same thing. So I'm now going to put in the second target, which in this case, of course, is not a real target. So I'm just going to put in a random number, and then I will just delete the target order. So it was 24.62 and 24.09. And take profit, I'm just going to put in like 28 or something like that. I'm going to click 50 units, 50 shares, and click buy. Now we have a take profit up here. I can then just cancel this order. I think is that cancelling the entire bracket? I'm not sure if it cancelled the entire bracket. Let's check our orders. Oh no, that's great. So I'm just going to show you here. So we've got all our orders in now. So we have our buy, 2 buys, 50 shares each. We have stops, 2 stops, 50 shares each. And we have our 1 limit. So that's great. That means that if we were to get into this trade, we would enter at our entry. If it was to hit our safety target, we'd be out in a break-even trade. Then we can trail our stop behind us and potentially take profit as we go. So we have 2 minutes left. So you guys let me know if you have any questions on anything I've covered today. I'm glad that we were able to get through an entire trade, start to finish. So this is ON long. The next time that we're together, we'll have a look at how that went and what we do. Again, I just want to make sure that I highlight to you guys at the moment, of course, not just with the election, but with COVID and all the stuff that's happening this week, and the fact that we have an indecisive market overall. Be careful, potentially be more strict, potentially be more conservative on your risk. Of course, there's really big gains to be made too, a lot of reward out there, a lot of opportunity, but make sure you stick to your rules. Don't let the potential volatility kick greed into place and take over from there. Now, again, just to remind you guys, if you go to tradewithufos.com/Becky, if you want one-on-one coaching with me specifically, you can get it on there. You can sign up for your Trade with UFOs membership if you're not already, which will give you access to many different things. One of the most important ones is this Q&A section down here. Q&A section is not just great for you guys to get your questions answered, but also for other students as well who may have the same questions as you to come and find out from that. So if you go to tradewithufos.com/Becky, then you can go from there. And then if you want to sign up for the Auto Climate, which is a free app, or the AutoUFOs, which is a paid for app in different capacities, depending on where you do it, or different courses, then once you've signed up for the membership, it will then take you to the main page, which I'll show you that next time when I have a bit more time. Put a stop on both orders. Yes, exactly. Put the stop on both orders at the same place. And the stop was, just for clarification, stop was 24.09. So the question there was, did I put a stop on both orders? And the answer is yeah. Yeah, it would be a stop on both orders, a target on one, and not a target on the other, so that we can trail our stop behind. Okay, so that brings me to exactly 45 minutes. Again, be careful, guys. Have fun out there. There's obviously lots of fun to be had at the moment, but be careful. I'll be back in a couple of weeks. If you have any questions, you can email me. It's becky@traddictiv.com. I'm just going to put it up here now. I can fit it on. Becky@traddictiv.com. There you go. So you can email me if you have any questions about anything I cover. If not, I'll be back in a couple of weeks, and let us know if you need anything. Take care, guys.